Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend. I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video.
All right, guys, so once again, you're all super welcome to tonight's training class. So let's do a little recap of the things we learned yesterday. Okay, so yesterday we talked about market structure, and I was able to enlighten you guys on how the market moves, right? How this candlestick are being printed on the charts, what the higher institutions do on the back end that causes the market to move to the upside or to the downside or sideways. So we were able to understand the fact that nothing else but money moves this market, just strictly money. All right, there's no personal coding behind it, it's just money moves it. And also we were able to learn, study market structure, how the market moves in waves, okay, to the downside or to the upside. We were able to learn those things yesterday. And then we were also able to learn what we call the market trend, what's it called again? The strength of the markets, okay, the strength and the weakness of the markets. So if we can take a look at yesterday, you know, I was already observing the move that yesterday night, and I sent you guys a screenshot of it. So far so good. This is the move. This is where we were yesterday. All right, this is that move that we were talking about. This was that zone that we drew out yesterday, which the moment price stopped. Now you guys would notice something here. You can see that where it tapped, all right, after it came down for a while, that yesterday, this is still 24 hours, so it's still a daily time frame. The bull still try to push up again. The moment it tapped that same zone again, it fell instantly. So throughout this day, the volatility 75 has been bearish, strongly bearish. Why? Because I already told you guys that the manner at which the bulls were moving, they were already losing strength. All right, and we can see clearly that the market indeed has been massively bearish, as I explained to you guys yesterday. All right, as I explained to you guys yesterday, the market has been bearish throughout today. So this was that initial move yesterday. All right, so it created a first stop. Now let's move into the main business, guys. We can see clearly what the price did here. See here, look here, observe, guys. The market went bullishly weak, or should I say weakly bullish. All right, the bulls were trying their best, pushing. When they got in, look at the full trend the bears used for 2 good hours. The bears pushed massively. This candle here alone shows that the bulls did not even the bulls couldn't even show up at all here in this candle. So that's why I told you guys that the candlestick is what the language of the chart. So when you understand these things, it's easy for you. So the candle here is telling you what happened during this hour, that the bulls never showed up. The little they showed up was just here, and that's little or nothing. In fact, the moment they tried to show up, the candle closed, and the bears still kept on pushing all the way down here. Before the bulls pushed back a little bit up, and the market closed, and then the bulls started showing up. So you get to see that The bulls, when they show up, their candles are little and little. It's either little and little. But when the bears show up, look at full strength, full strength, full strength, full strength. So what does that tell you? That tells you that, man, the bears are here for the mean business for the markets. All right, they really mean business. So now, according to the things I was showing you guys yesterday concerning these institutions using money to move the markets, let me give you a little recap on it. So here, the bulls put some money here and use their money to push price all the way to this level here. That was where it created the high. All right, so the bears added little money to create a low, which was a pullback. All right, then the bulls added another money and pushed market to this upside. When they push market to the upside, that place is a zone for the bears, no-go area, especially a zone that they used a full-time strength in the past to push down from, right? So this very strong zone in the past. You guys saw how the bears pushed there. So that zone, you can't be played around it. That's why you notice that the bulls didn't even move into it. They couldn't even move into it. Already, they were already showing weakness before they got there. They just tried their best to even get there. See, that's the reason why most times you can draw a zone. Most times you can actually draw a zone, okay, anticipating that price should get to your zone so that you sell from here, okay, so that you sell from your zone. This is the reason why sometimes you just notice that price wouldn't even get to your zone and it will fall, and you just be like, hey, why didn't it get to my entry point? And I was waiting for it. The reason for that is because these bulls have been showing weakness a long time ago. The move you see them doing, they're just trying their best. They're just trying their best to get here. So if care wasn't taken, they would have even stopped maybe somewhere here, or maybe they would have just respected this resistance that was here, respected it and fell. But they just tried their best to push and tap into here, right? So that's really what happens whenever you see price not getting to your zone and it suddenly falls. Maybe they are so weak, and they're just trying their best to get to a certain level, because that's what they want to do. They want to grab the money out of it. They want to grab people's stop loss. A lot of people are putting stop loss there. A lot of people must have placed sell here. All right, a lot of people must have placed sell on this zone, waiting to sell from here, since they have seen a resistance here. And then the bull said, no, let's try our best and tap into here so we can take off all their stop losses before the move begins. Okay? And the reason why they will do that, they know that by the time they hit people's stop losses, a lot of people all over the world who are trading, who get stopped out, a lot of them will be like, man, I'm not trading again. Some of them will be like, man, who knows if it will fall here? Since they take my money from here, they might take my money here. Because of that, I'm not going to trade again. You understand? So out of fear, some people are even going to trade again. But why those who, when they lose here, they're waiting for here, and still wait to get it? All right. So now you notice that the bulls pushed here and the bears rejected, and the bulls pushed up again. In that case, when you see this kind of a thing, it has given you a confirmation for a proper entry. In case if maybe you didn't get the entry at the first place, this is a second entry for you. Double top. All right, it's a double top, giving you multiple confirmation, and that was why you can see it's a strong sell. Anticipation should be that your TP should even be here. So these guys are grabbing all the money that these guys put here. So right now, this money, the bears have taken this money to themselves. The bears have taken this money to themselves. They're taking this one to themselves, and they're still heading for this one here. So if care is not taken, because of the full strength in them, they can break it and keep going for other money that are hanging here. Okay, so the forex market is just kind of like, should I say, maybe we call it a chess. It's a chess between the bulls and the bears. So you have to use some of your chess to grab other chess. All right. Sometimes you can use your king. You can sacrifice the king to grab the queen and the priest of the other of your opponent. So it's just like a chess. So they use money to grab money. The same way you as a retail trader use your money to make money. All right. So it's a simple logic, guys. So today we're going to be talking about some other candlesticks that you need to know about, which are very crucial, so that you can always be looking out for them when waiting for entry or when waiting for confirmations. Okay. Let's look at. I hope we all have a pen and papers and books with us. Okay. I want to believe you all have that. 5 important candlestick principles. 5 important candlestick principles. Okay. Number 1. 5 important candlestick principles. Number 1. Not all candlestick signals are equal. Should I take that again? Not all candlestick signals are equal. They might look the same, but because of different reasons, one might be stronger than the other. Okay? We're talking about 5 important candlestick principles that you need to know. So when you're looking out for candlestick patterns for your confirmations, you need to understand that not all the candlesticks you see are equal. Some of them might be weak. Some of them might be strong. For instance, guys, let's say we come into the chart and we see candlesticks. Let me look for a typical example. Let me look for a typical example of the candlestick that we can always look out for. For instance, here we can see here we have let me expand this more. Okay. Now, for instance, we can see that here we have this candlestick. Here we have this other candlestick. All right. We have this candlestick. We have this other candlestick. This candlestick can be telling you the bulls are in power. All right. This candlestick can be telling you the bulls are in power. The bulls and the bears are actually in power because it's a doji. And you would now be like, so which one should I believe? Which one should I believe? Let me believe this one that the bulls are in power here. For you to see this guy in between them, he's telling you that, look, this area is actually questionable. This area is, there's something happening here. All right. When you see this kind of a doji around this zone, it's telling you that something is wrong somewhere. So even if you're seeing some strong bullish candles there, it's still not quality information for you to say the bulls are in power. Besides, you can see, for instance, here you can see a very strong greenish candle. You wouldn't say, oh, the bulls are in power, it's a green candle, and buy. No. You can see what happened next after the strong bullish candle. The next candle was strong and bearish. All right. So, seeing these candles, don't just quote and say the bulls are in power because you saw one strong bullish candle. You need to check out the previous candles before it. What happened to them? How do they look like? What are they telling you? Then you can check out the next candle after it for proper confirmation. For instance, look here. We had this green candle here, and we had a very strong bearish candle. Very strong bearish candle. The next candle was also bearish. Someone will say, oh, let's start selling from here. The bears are fully in power. Then what happened next? See, the bulls started taking power, going up gradually. Going up gradually. So you need to be careful about these candles. So it's not just about, I'm seeing a bearish engulfing pattern. or I'm seeing a doji, or I'm seeing this, or I'm seeing that. No, you still need to be extremely careful. So not all candlestick signals are equal. They might look the same, all right,